Okay, what's up? So I haven't read this book. There's a book called Capitalism in the 21st Century or something like that by Thomas Piketty. I've read some summaries and stuff. I just wanted to comment. It's just sharing my thought processes. I wouldn't say I'm an expert on this, but it seems like the central tenet or idea he has is that um, it's all about income inequality, and he thinks it's getting worse. And he thinks he can prove it based on the fact that I hope I'm roughly representing it right. I'm not trying to I don't know, like a straw man argument or something. Not, uh, I think the basic idea is the rate of return on investments or capital is tends to be faster in almost all countries or developed countries compared to the average economic growth. Okay, now so yeah, basically, if you invest $1 million in something, the rate at which you'll get a return is better than the overall growth of the country, with the like fairly tame conclusion, which is quite logical, is that inequality is going to get bigger because anyone that's rich is going to get this rate of return and accelerate while the country goes at this rate. So you're getting a spread. The only thing is, there's a few things. First off, there seems to be a presumption that inequality is bad. I think inequality seems to get really closely associated with like social justice or social injustice and discrimination. I don't think it's the case. You have like if you had a family of five kids and they all get equal opportunity to play on the piano or learn an instrument, you're not going to expect all of them to be equally good at music. So it seems, I don't know if that's the most apt analogy, but I don't know why we expect everyone to perform equally well in everything. Like whether it's based on age, sex, race, ethnicity, or culture, other whatever other patterns or your family background. Like why would you expect everyone to perform equally well? That there can be trends, there can be patterns. Like in obvious ones that come to my mind. Now, I'd have to look up the statistics, but I'm sure nursing is probably dominated by women. Primary school teachers, I know, is completely dominated by women. Um, Trying to think. Computer programming, I'm guessing, is dominated by more males than females. Basketball, there's a lot of black people. I'm sure golf and ballet, you mostly get white people. This is maybe America. In any country, you're going to get some patterns. I don't think it means that anything bad is happening. And the reason I brought up all those examples is because I think most of those people are not worried about. Like, for example, the programming, I think, is the one most people will get upset and say, why are women not programming? That's really terrible. Like, whereas all those other ones are completely acceptable. American football, I think, is dominated by black people. I'm pretty sure at Australian football, we get a lot of islanders that play, which compared to their population in Australia, which they're overrepresented. I don't think there's a problem with any of this. You need evidence if you're going to prove that something bad. And I just think it's a bit similar. Like with inequality, I'm just thinking, for example, let's say there's a family or a person somewhere and they just do no work. They just sit there. This is just an example. Meanwhile, somewhere over in the opposite side of the country, there's someone that decides, I want to start a big farm and big company, and they decide, all right, I'm going to hire all these farmers, and I've got this plan, and they start a business. All these farmers get jobs, and they earn a bit of money, and then this person that started the whole thing, this whole franchise, ends up rich. Okay, now the whole thing is they created that wealth. They didn't point a gun to anyone's head to buy their food. They ended up rich, and then all of a sudden, this other person on the other side of the country who hasn't done anything is apparently entitled to it, or the gap between them is apparently a bad thing. Like, the more money that rich person earns that started that farm, the worse society is. And I don't completely get that. So, now I know that's just an example, but I think the problem is people do use these cliches in their mind. They think there's rich people who are just born rich and they don't have to do anything and they just relate. I think nepotism is bad. I think people that just get advantages, I don't like that. But I think trying to decide the government has to do all these taxes to try to, by doing that, you really mess up incentives. Like if you have welfare, poor people no longer have an incentive or as much incentive to work. You take more tax from rich people, there's less incentive for them to work as hard or to keep doing what they're doing, which is usually running a business that people are happy with, that people are trading with. You can't get rich just because, you know. Anyway, I want to look at his equation a bit, like the idea. So the rate of return on capital is higher than the average economic growth. That's interesting in a way. I want to look at it a couple of ways. So one thing that I think is actually just an interesting economics phenomenon, which I'm quite confident is true, is there is a tendency overall, let's just go with free market capitalism for now, a tendency for all different industries and sectors over time to grow at a similar economic rate. This is really interesting. Why would they tend to grow at the same rate? The reason, and I mean rate as in the percentage return per year, the reason, it makes perfect sense to me once I thought about it. In a way, it sounds completely false. Like one area might grow much faster than another. But the idea is if there's one area that is growing a lot faster, let's say most things are growing at about 5% per annum, one area of your country's economy is growing at 7% per annum. Any investor or new business person that wants to start something up is going to lean towards that 7% per annum place. That's the best place for them to invest, resulting in that area getting a bit bigger. And once something gets big, it's a bit like the fact that it's 7% per annum implies there's a higher demand for that. In reaction, the supply should go up a bit, and then the demand will go down or sort of balance out. So meanwhile, they'll draw money out of other places. If there's something that's only growing at 2% per annum, people are going to tend to think, yeah, I'm not going to invest as much in that. There's a tendency for things to change size. So some industries may really boom and get big, some will get small. But over time, they're going to reach this point where the percentage return per year should match. I mean, this even goes, there's interesting cases like if someone's selling pianos, they may sell, the profit margin may be huge. They may sell them for 5 times the amount it costs to make them. But a person selling pianos may only sell a handful of pianos per year, but they're selling them for thousands of dollars at 500% of the original cost. Whereas something like bread might be getting sold, I'm sort of quoting again Thomas Sowell, I get a lot of my information from him. I think he explains things really well. They might be selling bread at only a 5% or 2% profit margin, but there's the bread, so it might cost them $1 to make the bread, $1.10 to sell it, but they're selling like 20 loaves a day or something like that. So the overall sort of rate of return per year actually ends up matching with pianos. Again, it doesn't have to, but that if one was growing faster than another, that would be an indication that you could put more money into that sector, or you can raise prices, or whatever it is. Or other people can come into that business and create more competition, prices go down, but it becomes bigger. So, but yeah, so what I find interesting, and I'm just trying to understand the theory of this. This makes a lot of sense. There's a long-term tendency for different sectors to grow at similar economic rates. Like I said, if they didn't, there'd be a shifting of resources until they did match. Even like if you had a shop selling shoes or whatever, if certain types of shoes were selling really well, you would adjust so you had more of those in stock. And if something wasn't selling well, you would have less of that in stock. But you would find your percentage profit per year, like for every part, would be about the same. It's just that some shoes there'd be more of than others. So same with industries. Industries can be different size, but same percentage growth per year. So it's a bit strange then. Why would the return on an investment be different from the overall economic growth? It should be about similar. So I actually thought what this seems to indicate is that some part of the economy is being prevented from being as efficient as the rest of it. Maybe I can't justify that, but this is what I'm just thinking. So, and I thought a simple explanation is if the government is interfering in certain sectors, it's going to make those less appealing for any investor. So, for example, let's say, I don't know if this is the best example, but say healthcare or anything to do with health, medicine, doctors, hospitals, or roads. If it's run by the government, it's possible. I mean, again, I can't justify that necessarily, it's less efficient. But just let's say that was the case. Then that would mean that, let's say, most industries were growing at a certain rate, and then these ones which are interfered with the government. The reason I say government ones are less efficient is because their money isn't on the line. They don't need to rush. They don't need to. There's often no competition. It's a monopoly, and that's bad. But anyway, let's just say there's a certain amount of inefficiency. Anyone that's going to invest money is going to choose to invest it in those areas that are free from that interference of the government. You know, if you've got lots of money to invest, you're not going to invest it necessarily in health, if that's something that's run by the government. I mean, I don't know. I want to learn more about this, but that's why it doesn't seem that bad. To me, all this suggests is that there's some inefficiency in the economy, right? Otherwise, things should be growing at about the same rate. Maybe I'm missing the point, but I want to learn a lot more about economics. But that's what was the point I got to. The other thing is, it's also possible, like, what if why is it so hard to believe that the people who are currently the richest may have gotten there by making good choices? Maybe they're people that are good at choosing what to invest their money in. You know, someone that just invests their money randomly in things that aren't particularly reliable, like let's say a bank that just loans to anyone, it's probably going to go out of business pretty soon. So they're going to end up being the poor people that, you know, now depend on the rest of society to help them because they're poor. I don't know. I'm not making fun of people that actually have issues, but I just think, yeah, there's this, I don't know. There are these weird stereotypes, and the thing is, poor just means you don't have money. It means you didn't succeed for whatever reason. Whereas these people that have lots of money, you know, they may just be good at decisions. So it's not surprising that their choices of investments may be better on average than society as a whole. Like, it's a bit like if Magnus Carlsen's chess rating kept going up and thinking, oh, this is really bad. The chess inequality is just getting worse and worse. Like, what if certain people are just really good at producing, coming up with good ideas, running companies well, choosing where to invest money and choosing which I don't get it. Isn't investing a really good thing to do? Like, if you've got hundreds of millions of dollars, picking people that, you know, and wouldn't you want them to get a good return on that investment? And aren't they just then going to invest it again? I don't know. I think there's more to it than that. And I can understand, again, I think people have these images, some of which is true, of wealthy people that have all this power or just pass their wealth on. But I don't think that's as true anymore. It used to be more of a true stereotype 100 years ago or even more. And I think it's become less and less the case. And it's just really terrible to take, you know, a general sentiment, a pattern that you have in your mind that you think exists, and then try to suggest all inequality is bad and we must have everyone at the same level, which is communism, I would have thought, or part of the way. It's like people want to go part of the way to communism, and that's apparently good. I don't get it. Yeah, it just seems like inequality doesn't even seem like the right word to me. It's just differences. Like, not everyone's earning the same amount of money. We have very rich and relatively poor. I'm pretty sure obesity is a bigger problem in Australia and America than poverty is, or at least than starvation is. Like, unless starvation is a problem, I don't get it. And I'm pretty sure Western countries are pretty philanthropic as well. What I don't like is the government just saying, these are the rules and you have to give money to, like, you know, pay these taxes, and we're going to give, you know, basically taking from the rich, giving to the poor. It sounds nice, but then messes up all the incentives and completely works against people who have potentially worked. It's their freedom. Why can you take away their wealth? There was a Thomas Sowell quote I really like. It's something like, why is greed bad when people want to keep what they've earned, and greed is good when you want to take money from people to give it to people that haven't earned it. Like, I read an interesting article by Bill Gates, which seemed to be really, like, I actually, one of the things I liked about it was it didn't seem to just say, oh, this is right, this is wrong. He said he thinks he brings up good points, Thomas Piketty, but there's also some flaws and other things to look at, and he wants to make it like part of a conversation. It's also interesting because he's obviously one of the richest people in the world, Bill Gates, so I'll put a link to that. But he mentioned that, yeah, you shouldn't just look at income, you should really look at consumption. how much people spend. Because, for example, as I've pointed out in another video, Bill Gates pointed it out, if someone's really rich and they just have a year where they decide not to do much business spending, or their stocks just kind of go down a bit, they're going to appear below the poverty line or whatever, and it's extremely misleading. So you shouldn't just look at income. The other thing is, he suggested someone who is rich, who gives lots of money to charity, or who invests it in their own business, could be considered much more noble causes than someone who is spending money on a yacht or other personal things. I think maybe implying to some degree, maybe, luxury things should be sort of taxed more than other things. But yeah, look, I'm still forming my ideas and trying to understand basic economics and politics, and I think everyone wants to feel like things should be more equal in some sense, that everyone, if someone is smart or brilliant, that they have the right to succeed. But that's the thing. I'm reminded of the movie The Incredibles, where Dash is super fast and Mr. Incredible, or whatever his name is super strong, and there's Elastigirl. But there's this rule of society just wants them to settle down and be normal, and everyone's special, which is like another way of saying no one is. I felt like this when I was at school. I was always good at maths, but I'd always get called a show-off, or wouldn't get recognized. Why can't people excel and be good at what they're good at? That's why I think just freedom. Stop trying to... That's the other thing. We don't just take from who are the rich, like the wealthy, and give to them. We wait and see who ends up becoming rich, and then we're like, no, you weren't, So when someone's building a business and getting started, it's like, oh, that's all good. Once they get too rich, we're like, whoa, inequality. Like, you can't... I don't think that's fair. And I think the big issue was like 100 years ago or more, when you had class systems. That was a problem. But I don't know. I want to learn more about capitalism. I'm pretty sure capitalism, free trade, was one of the things that helped get rid of that. It meant that anyone who had a good idea, in theory, could end up becoming rich. The other thing is, I don't think money should be connected to power. That's why I think government should not have anything to do with economics, because that creates incentives for companies to try to buy parts of the government or to influence it. Or at least that's my simple logic in terms of that. Okay, yeah, so just quick summary. I haven't read the book, so I feel a bit stupid. I have tried to read several things to get the actual idea of it. I don't think... Thomas Piketty seems to assume income inequality is just inherently bad. He also doesn't seem to... It's like that you want everyone exactly the same amount, or is there a certain amount that's okay? I think it's okay as maybe something to discuss, but as Bill Gates said, should look at not just income, but consumption, maybe wealth as well, like static wealth, how much capital you've got. I also think, like Bill Gates said something about, maybe you could tax more of, things that are inherited or estates. I don't know if that's good, because that creates... I saw a video where Milton Friedman talked about that a bit. If you tax people on their inheritance, then there's incentives for people, rather than saving up money and giving it to their children, to spend all of their money. If I get old, I think I'm about to die, I know none of it's going to go to my kids. I might decide I'm going to spend all of it, or I'm going to spend it on things and I'll distribute it. It's just, I don't know. Why can't people have the freedom, if they've earned a lot of money, to give it to their children? That creates extra incentives. It creates incentives to keep working, even if you're getting older, even if you're going to die, because you can pass it on to your children or your family. People have pride in their family. Isn't that something we value? I think what Thomas Piketty says about the gap getting bigger, I think is logical. But I also don't think it's necessarily bad. As Thomas Sowell pointed out, a lot of people, more than half of all households, I think it was 56%, will be in the top 10% of all households, income-wise at some stage. So it's not like it's an exclusive club. There's a lot of changing around. But maybe more importantly, or in relation to that, there's a tendency for people to start in lower brackets when they're young and then move up to higher brackets as they get older. And more society is valuing people with experience who have done a lot of work. So this gap isn't necessarily a bad thing at all. It's just the gap between those who have very little experience or low skilled abilities or don't do much work compared to those that are doing really innovative things or are highly skilled. And again, I think there are cliches that go both ways, but you can't just take the cliches that you like. There are rich people that are just always rich, and there are these struggling people who are stuck in a low-paying job their whole life, and look at broad statistics, and that supports the cliches that you have envisioned. You can't do that. Statistics give a broad picture that may or may not be bad. Inequality is not necessarily bad, or else, like, for example, why are Asian Americans, why have they outperformed white Americans for decade after decade? Is that racism? Is there someone somehow benefiting them? Or is it possible that different cultures, different groups succeed in different ways and different individuals work at different rates? We should focus on freedom and also look more at the sort of carefully, how did people become poor? Not what can we do to make it more fair? We should look at that, but look at how people can get jobs, how people can start earning money, and what can we do to encourage people to work really hard and earn lots of money. And I think most of the people that earn lots of money do invest it and give money to charity, and it's their choice to do that anyway. They earned that money. I just think it's ridiculous to suggest anyway. So I'll leave it there. Let me know what you think. Maybe I'll look more at that book. I don't think I really want to read it. I just think it's fundamental concept. It's like he's already decided inequality is bad, and here's all the evidence that backs it up, and inequality is getting worse, and therefore we have to do all these taxes, when it may not be such a bad thing at all. I just think freedom is really important with regards to this, and we've got to look more carefully at who are the poor people who are really staying poor, and who are the rich people who have these big advantages, and what can we do to change that if there's a real issue. But that's different from just broad statistics. Anyway, okay, bye.